So welcome back, guys, to our weekly live event where we discuss real estate, personal finance, investing. You know, any of your questions regarding finance, I'm happy to help. For y'all that don't know, I'm Pascal Corcus. I have a finance degree, minor in mathematics. I got a second degree in accounting, minor in economics and international business. I worked for Bank of America as a banker, Citigroup doing anti-money laundering, worked for PricewaterhouseCoopers, working on taxes like companies like Home Depot, and I was head of an accountant at an oil company. I own my own accounting firm, my own insurance agency, and my own mortgage company, as well as a real estate investment company and property management. So I'm happy to help with any questions. And this week, our topic that we're going to go over before we go into our Q&A is why it will take 12 to 24 months for the stock market and the real estate market to go down. That is our topic for this week. Now, for those on IG, they keep telling me, hey, the information is backwards. If you go on my YouTube, which is at Pascal Corcus, the information is not backwards and it's a lot larger, so you'll be able to see more information. Plus, we have better audio equipment and video equipment. So if you're wondering why it's not perfect, that's the reason why. So I'm going to answer the questions and go into the Q&A in a little bit. But first, I want to hit on our topic, which is, again, why it will take 12 to 24 months for the real estate market and the stock market to go down. So this is basically how it functions. We have our world is segmented in different ways. So there's the stock market and how it functions. There's the real estate market and how it functions. And then there's basically Main Street or the real world and how it functions. And all three kind of lag each other. They don't really correspond very well, but they do mimic and have a rhythm with each other. So when one thing happens, the other things will eventually reflect it, but it takes time. So with the stock market prices are based off of sentiment. Sentiment meaning feeling, emotions. If people feel that things are going to get better, then the prices are going to be high. And normally you're going to reflect that on a high price to earnings ratio. And normally a high price to earning ratio is around 30, we'll say 30 and above. For example, right now, Disney's at almost 40 PE ratio. So that means they think this company is going to grow, they're going to spend more money, they're going to make more money. And that means they're going to be having a lot of customers coming in. So, so as sentiment goes up, prices go up, the PE ratio increases. As sentiment decreases, meaning people don't think the outlook is going to be that great, prices decrease. And that's how it works in the stock market. And the stock market normally is behind the Main Street about 3 months. Then we have the real estate market. So the real estate market goes off of not a little bit off of feeling, but more off of demand, which is also based off of feelings, right? So as more people are demanding to rent something in a certain area, prices go up. Like in New York, the prices are very high for rent. Well, they couldn't actually charge that much money if people weren't willing to pay it, and there wasn't a lot of people who wanted the pricing. That wanted to rent that property and be willing to pay at that price. Now, the same thing for real estate to purchase. When you're purchasing property, it's based off of demand. So currently, right now, for example, in some counties in California, they only have about 2.2 months worth of supply of homes for sale. That means if they sold every single piece of property and no additional property went up for sale, all the properties would be gone in 2.2 months. Which is a lot of pressure to increase prices. Right now, or that's what it is right now. Normally, it's about 6 months worth of supply. So if they had 6 months worth of supply, the pressure for prices to increase wouldn't be that high, and the prices wouldn't go up. So those are how the markets function. Now let's talk about Main Street. What happens on Main Street determines what happens on the stock market and the real estate market. And in a little bit, I'm going to put up on the board to show how things are going to reflect. So with Main Street, I'm going to actually erase the board now, and then I'm going to start drawing the information so it kind of visually makes sense too. Sorry, Bear, you got to go. Okay. So the best way to explain it is actually prices over time. That's going to be the best way to explain how things are going to happen over the 12 to 24 months. Price over time. So we're going to go over here. We're going to go price. And this is here's time. Okay. Kind of looks like a pie. But time. So what happens is right now you're going to see spending is going to start slowing down. So as we start spending less money, the small businesses aren't getting the money, right? So right now so let's go back to the stock market. The government gave out a lot of money, but a lot of the money didn't go into the very small Americans that made under $150,000 a year, and it went to a lot of rich companies. But the people in the middle didn't really get a lot, right? If you made $300,000 a year and you owned a small business, and both of those things got hurt, you really didn't get much, especially if you didn't have many employees. Like the PPP funds aren't really doing too much. They're doing something, but not a lot. So we're going to have a crunch in that middle section. There's nothing on the board yet. For people saying I can't see, there's actually nothing up there yet. I'm going to start drawing in a minute. So what's going on now is that if 10%, I just want you to understand this like fact, right? If spending decreases 10%, most small businesses become unprofitable. Their top 10% is where all the money is. So if spending goes down 10%, many small businesses will start letting go some of their employees, and many small businesses will actually have to shut down because they're not making enough money. So 10% drop, right? A 10% drop in income for many small businesses will cause prices to go down a little bit, okay? So this is, the red is the stock market. And blue is going to be the real estate market. So that 10% drop isn't going to reflect right away. It's going to take about 90 days for the stock market to see that. And as it's dropping, it needs to drop. As long as it drops the amount everyone thinks it's going to drop, their feelings are going to be okay. So the price of the stock market isn't going to drop that much. It's not going to drop hard. It's only going to go down a little bit, right? That's why we're right now about 20% lower than our height was, instead of more than that. Now, this is based off of feeling. Now, what happens is as more people are being let go, right? As time goes on, more people are going to be let go. More businesses are going to close. Less money is going to be spent. And that money is going to be spent less and less and less being spent. So it's not circulating in the system. So there's not enough liquidity in the market. Money's drying up. People don't have it to spend. They can't get loans, right? You already heard they're reducing the amount of people to buy homes, or reducing the amount of loans they give up to investors, to people who want to buy real estate or invest in their business. They're reducing that. So the amount of money in the market's dropping. So what's going to happen over time, every 3 months, the stock market is going to realize that it's worse than it is. And eventually, they're going to be calling it a recession, a depression, which then normally has a big drop, right? And that's going to happen. Now, before I say how are we going to recover, I'm going to show you now how is the real estate market gonna reflect this information, right? So the real estate market here, so blue is real estate, RE, okay? So the real estate market normally works like this, okay? The real estate market prices are here. So the prices are gonna be say right here, okay? Prices really haven't dropped too much. And what you're gonna be seeing is they're not going down. And you're like, why aren't they going down that much? We're not seeing much of a drop, right? Let me tell you this. Before we go here, we're going to see some foreclosures hitting the market. The foreclosures we're going to be seeing over the next 12 months are really from 2015 to 17. These are not foreclosures from Corona related, okay? these are evictions from back then. Those foreclosures were sold to hedge funds. Hedge funds gave it to asset managers to remodel and to get them rented out by property managers. They're under a 3 to 5 year contract. Well, that contract is expiring, and they basically reviewed the work that they did. They didn't do a good job on the remodels, and they didn't do a good job on renting. So they're losing a lot of money. And because they're losing a lot of money, they're saying, sell my assets and get out. Well, they can't get out on a lot of these properties. They cannot get out of them because there's the evictions and forbearances. And this is my point here. Right now, there's going to be downward pressure to have real estate drop, okay? But why isn't it dropping? Well, there isn't a lot of supply coming to the market. And the reason why is because what's holding up the prices is how they're not allowing evictions, and they're not allowing basically the forbearances. So the forbearances are avoiding evictions from happening, and they're avoiding people getting foreclosed on. So because this supply isn't coming to the market, it's holding the price up because we don't have enough real estate on the market currently. And a lot of the stuff that's going to hit the market, people are holding off. People are trying to see what's going to happen. Because of the coronavirus, people can't sell things. People can't come in. They're concerned. We have people with people that are going to get evicted. They can't get evicted because some of these homes that I'm telling you that are going to be coming to the market because of the foreclosures from 2015 and 17 that are not, they can't even put them to market because they have tenants in them that they can't evict. Right? They have this issue that they can't, put them to market. So what's happening is these evictions and these foreclosures and the forbearances that are avoiding the foreclosures. So they're not letting evictions happen. They're not letting foreclosures happen. So the supply is being reduced, artificially held up by the government. So the government is keeping the supply from hitting the market, giving time. They're hoping that in this process, they're going to be working out all the extra stuff, right? Do you know how they said, oh, we're going to try to lessen the curve of the coronavirus? Well, what they're trying to do is this evictions and foreclosures, they're trying to lessen the curve in a way, right? They're hoping that somewhere along the line that they're going to absorb some of it up. Some people are going to get back on their feet, and then it's not going to be a huge hit when everything's hitting at one time. But what I'm thinking, and what a lot of other big players are thinking, is that right now, these evictions and forbearances are holding up the price artificially. And just like the stock market's slowly going to go down, well, it's going to come to a point where the real estate market and the stock market they're going to get the news. They're going to finally declare that it is a recession. Boom, real estate prices are going to drop. And they're going to go boom, hard from like that. And now, again, I don't think it's probably going to be like maybe more like this than this. So more of like a stair step type of situation instead of a gradual drop like this. Is the stock market also going to have a significant drop too? Yes. But the real estate market is going to look more like stair steps compared to the stock market is going to be more like, V'ing down. They're going to V down in the stock market. It's going to stair step in real estate. So, and now this is what's going to happen over 12 to 24 months because as these evictions and foreclosures start rolling out and they process them through, they're going to come out. Now, in certain states like New York and California, they're going to take longer for them to happen because the government is pro-tenant. So it's going to take longer for those to happen. The process is longer. The foreclosures take longer. So it might be more like the big hit might be for New York and California might be 24 months. But there's a lot of smart people in the game. So they're going to know this is going to happen. And because they know this is going to happen, they're going to actually stop buying. Right? So that's also going to add to it. So people are going to stop buying, stop spending, and then these foreclosures are going to hit. So that's why these stair steps are going to continue to happen. So around 24 months to 36 months, we're then going to start seeing so now we're going to fast forward, okay? So this timeline, say 12 to say 36 months. We're now back to now we're at 36 months up here. So I'm going to erase all this. Okay, So at 36 months, what's going to, all right, oops. So at 36 months, shouldn't have been so aggressive. At 36 months, what we're going to see happen is basically this. You guys are probably having a good laugh at home. So in the stock market is going to have one of these. As the money starts being spent, as feelings are going to go up. Now, stock market in reality is going to go up probably faster than the real estate market is. It recovers faster. Okay, the real estate market is slower. It's lagging the stock market because with the real estate market, it will take. I'm going to give you guys a second to get all the laughs out. With the real estate market, what's going to happen? Why it's going to start from 36 months to say 72 months, which is like 3 to 6 years. What happened is all the people that got foreclosed on, evicted, all their money got spent, their credit went bad. It's going to take them 3 to 6 years, or actually 3 to 7 years. So for their credit, their cash, their tax returns to get back. So there's going to be a ton of people who want to buy stocks and want to buy houses. The problem is with the housing market, it takes a lot more than just money to get in. It takes credit, it takes tax returns, right? That's why in my course, it teaches the foundation of all this stuff. Because if you're just good at one thing, it's not going to help you, right? If you're just good at one of those other things can take you down. That's why it helps you across the board and all those things. So it will take them 36 to 72 months to get their credit, cash, and tax returns back in order. And that's why you're going to see another 3 years on top of that. So up to 10 years of the real estate market going up. And that's why you're going to see the real estate market go up for about 10 years. So I'm going to see the bottom is going to be 24 to 36 months. And from there, we're going to have about 7 to 10 years of good times again. How? So, what questions do you guys have? A lot of questions, right? How does this? So, one question is, how does this apply to Canada, sir? So, globally, this is going to happen. In 2008, the global market tanked. We are a global society now. We're not, we're not segregated anymore. We're a global market. Everyone's going to feel this to some capacity. Is there certain areas that are going to feel it less than other areas? Yes. But are people going to feel it anyway? Yes. Can you still, this is what I'm trying to draw to you is if you're going to buy anything in the next 12 to 24 months, don't buy it now. Wait 12 to 24 months because you're going to see a lot of opportunities come up. And I want you to take advantage of them because the profits are going to be great. I predict that we're going to have almost a 50% drop in the stock market. Now, let me teach you or explain to you why, okay? Yes, so really good point. Here, I'm going to pin this. It says, Las Vegas real estate is going to die fast. Anywhere that's a vacation vacation spot or that you have to travel to is going to get hurt very bad. It's going to drop significantly. Back in 2008, hear this, man, it's so sick. Back in 2008, condos that used to sell for $200,000 to $300,000 on Clearwater Beach, you could pick one up for $25,000. $25,000. It's freaking sick. So I'm patiently waiting because I want to pick up some nice, waterfront property. I'd love to pick up like a $3 million house on Clearwater Beach for like $750. That would be like sick, and or even less if it needs work, So I would be awesome, and you guys know that I like coastal properties just because it's kind of my style. I'm willing to buy other stuff. I'm actually looking at stuff in like Texas and Kentucky and in other areas just so I can diversify my income and cash flow. But yeah, so let me explain one more thing to why I think the stock market is going to probably tank like 50%. Okay. One, let's talk about the whale in the room, Warren Buffett, right? Warren Buffett has about $140 billion in cash. Okay, 140 billion. He has enough money to buy all of Disney. He could buy Disney, the whole company, and own it by himself. He can buy all of Tesla at $700 a share. He can buy many companies, the full company. Yet when the market dropped, like 30 something percent, went from like almost 30,000 to like 18.5, which is the price I said I would buy at. He didn't buy anything. He sold. He's been selling. He's not been buying. So if one of the greatest investors in history isn't buying, then I think I'm justified in my thinking. If Manny Kashabin, a great real estate investor, isn't buying, then I think I'm on the right track. So there's many companies saving up their cash, getting ready to buy, because I predict they think the same thing. They're not saying this, but I think what their actions is saying that they think there's going to be a double dip, just like I think there's going to be a double dip. I think there's going to be a double dip, and it's going to be pretty bad. So why do I think it's going to be a 50% drop? Let's talk about Disney, right? Disney currently is at like at its current is $115 a share. The price to earnings, PE ratio, the price to earnings is at 40 PE. So what does that mean? The heck did I put my eraser? Oh, well, doesn't matter. So PE, price to earnings. Price to earnings mean how many years will the company take to generate enough revenue to make up for the current price it's at. So for example, it will take Disney almost 40 years to make up for the current price that it's selling at. What does that mean though? That means sentiment is high. That means people think Disney is going to keep on increasing the amount of revenue it's generating. Well, with a majority of its revenue coming from its parks and from its cruises, and how there's going to be a significant drop in attendance, and there's probably going to be a bunch of new laws limiting the number of attendants and to make sure that people don't get sick in the future, I think that is really going to reduce their income. 40 is super aggressive. Like if you're over 30, that means people are very aggressive in the market. On average, a lot of companies are 15 PE. So that means even if Disney price sold for half, if it was around $60 a share, it would still be above the conservative PE number. So that is why I think the real estate market could drop, or the stock market could drop 50% it's likely, it's very likely for it to drop 50%. Another example, Tesla. Tesla's selling at like $800 a share. It doesn't even generate any money. It actually loses 81 cents a share, right? Which is not bad for an $800 price. But again, you're paying $800 a share for a company that's not making any money. Now, again, they're projecting that it will make money one day. But even Elon Musk says $800 is too much for his own company. So there is definitely, everything is very expensive for what you're being paid for, right? So I believe that the prices are going to drop hard, and after they drop hard, after a few years, everything's going to go super, super high. The prices of all real estate and all stocks are going to go, record highs. So I'm not bearish in the sense of I don't want to invest and I'm scared. No, I'm excited because I want to buy, and I've been waiting to buy so I can pick up on all these big discounts that are going to be offered. So get ready, save your money. Instead of buying, a duplex with the amount of money that you have to invest, you're probably going to be able to get a fourplex. You're going to get double for your money. So get ready. And same thing with the stocks. I mean, I like Disney, I want to buy some Disney stock, but at this price, it's so the amount of earnings I'm getting is nothing. It's not worth it. But at half that price, I would like to buy a lot. So that is why I think also all of the big players are not getting involved. They're not buying anything now, even though they have a ton of money. How many months do I think it's going to take? I think it's going to be 12 to 24 months before we start seeing something. I mean, we're going to probably bottom out close to like 24 to 36 months is where we're going to see that bottom of it. And then, so at 12 months, I'm probably going to, as long as I find a good deal, I'll buy. Like, just understand this. If you find a very good real estate deal, like I bought a property about 11 months ago. I bought a half an acre with like 8 units for like $950,000, and I made it into 16 units and invested probably like 5 to 600,000 into the property. Now that property is worth 3.2 million. So I don't care if everything falls because I got such a good deal. I'm only in for half the price. What do I care if it drops half price? So if you get an amazing deal, buy it. But if it's not an amazing deal, I want people to avoid buying something for 5% less than retail or 10% less than retail. Like, that's not where you're going to build your wealth, right? That's it, especially since so many people know something bad is coming. When it's coming, we don't know, but we know something is coming. So be prepared and save for that time because the opportunities are going to be really great. All right. Now we're going to go into our Q&A. I spent about 27 minutes of whiteboard time. So I think it was good. What do you guys think? Do you guys like all that? Like all that little nuggets I've been giving you? Thanks for all the thumbs up, guys, on YouTube, all the hearts on IG. I appreciate it. All right. So on YouTube, April says, thank you so much for your knowledge. I am learning so much. You're welcome, April. All right. And on YouTube, I think it's Raphael says, how do you that actually know that's the case? Poorly remodels and poor rented with these properties owned by hedge funds. Okay, so how do I know that these hedge funds had poor property management, poor remodels, and not making money? Because I'm in the industry, right? Like, I'm not a guy that's on YouTube that's talking about the stock market, talking about real estate, that just talks about what I heard or saw someone. I actually know people who own real estate brokerage, and all they do is work with hedge funds and sell their assets. So I knew 9 months ago, they said a whole bunch are going to come. So right now, I'm seeing some already hit the market. They told me it was going to come. They told me it was going to happen. Because they're normally these guys make decisions months and months out. So it's not like tomorrow they decide, okay, we're going to sell all our real estate, and they can do that. Like, I can do that because I manage my own fund and I ask no one's opinion. But these guys have layers of management above them and directors. So when they make a decision, they're going to be like, okay, in 9 months, our contract's going to be up. When it's going to be up, what are we going to do? We're going to not renew. We're going to actually sell them and move on. So they then tell the brokers that they work with that this is going to happen and to kind of be prepared. Hire more people if you need to do so, and so on. Like, so my broker, a lot of these brokers are going to actually downsize. Well, this broker actually went and got a bigger office and hired more people because his connection told them they're going to send them more work, and they already sent them a whole bunch of new listings already. I think he got about 20 new listings in the last, I think, like 45 days. So they're doing pretty well. So how do I know this? Is because people in the industry are telling me what's happening. And this is what we're going through, and this is what is happening. So when I have my own conclusions, and then I'm seeing that people in the industry are matching, I see what's happening. So I'm giving you an insider look of what's going to happen that other people don't know, right? Like, so these other guys that are, or other people out there that are like giving you advice in their opinion, they probably don't know that this is happening, right? So it's not their fault that they think this way, but they're not getting this data that I'm getting, right? So based off this data, and now, honestly, this data is just backing what I already think is going to happen. It's not kind of like the reason why I think this. I already knew it was going to happen. If you look at my video that I put out about 12 months ago about why I think 2020, 2021, the market's going to tank, had nothing to do with Corona. It was going to happen. But Corona just made it a lot worse. Whatever I thought was going to happen, it got a lot worse. At the same time, there was a couple of things that the government could do to change it, to make this this drop not as severe. But that's a whole nother conversation. So Raphael says, okay, answer that. So Candy Apple says, laugh my ass off. Ha ha ha. Yes, that was funny. April says, does waiting apply to flipping to auctions? So what I'm going to say is, if you're going to be flipping, you better be fast. You better be very fast, because you don't want to get caught in flipping while the market goes down. So if you can flip the property and sell it fast enough, then you could probably be okay. But you have to be certain that you'll be able to complete the project and sell it in time. So remember, and you have to make sure you have a significant margin there to be able to do it. Because if your margin isn't significant, then there's going to be a problem if, the prices drop 10-20% and you're not dropping your price 10-20% to match. A lot of times, this is what people go wrong when they flip. This is the major issue I see people go when they flip, what they do wrong, and why they're not successful when the market turns or certain factors change. They don't reduce their price fast enough. They want to try to make 50,000 and they hold out. And then finally, by the time they drop their price 10,000, it's too late. They need to drop it 15 or 20 and they won't. So they keep on dropping their price, but their price should have been dropped earlier. So they keep on lagging, and their price never really drops low enough to where they can actually get it sold. So because they don't move fast enough, they don't drop it low enough to move the asset, they end up having to hold on to the asset. They get stuck owning it and renting it. And then they become a landlord by default. So this is the problem. When you're a landlord by default, you're choosing to be a landlord, not choosing, but you are kind of forced to be a landlord because you don't want to sell the property at a loss, or you're like, oh, it's not worth selling at this price. One, you have a ton of cash sitting in it, and you're not making much money as renting a single family home. So you start hating what you're doing and you start blaming everything on the renting. Renting is the worst business ever. That's what you might think. The thing with that is, renting is not the problem. It's the way you executed your plan, and now you're frustrated. You're trying to make the money that you would make on a flip on a rental property. Doesn't work that way. Two, you might be having all your cash in this deal. Well, the return on investment isn't that great on an all-cash deal for a rental property on a house. So that's basically every single thing I said you shouldn't do compiled in one, and that's why the person's not going to be happy. Three, you can be in a hard money loan, so where the hard money basically sucks up all of the profit of that property, and you're going to be stuck having to refi in 6 months and pay points again. So you're going to be frustrated again. So you're going to blame a lot of it on renting, where renting is not the issue. The issue is your business plan did not match the market conditions, and you did not move fast enough, as fast as the market was changing. So you need to definitely be on your feet if you're going to be doing that right now, okay? Great question, April. Hugo says, is it going to be worse than 08? It definitely has potential to being worse than 08. I mean, we have the largest unemployment rate since the Great Depression. We didn't have that in 08. We have the most foreclosures and forbearances in I think greater than what we had in 08. So if we're looking at those factors, then it could definitely be worse. Now, what happens between now and 12 months? It can change things. Are they going to extend the forbearances? How is that going to be affected, right? It's really a big question mark on how are those things going to be affected. And really what's going to happen at that point is it's not going to keep anything from dropping. It's just going to push out how long it's going to take for it to drop. So I think it's going to be very close to how bad it was in 08. I think it's going to be really close. I mean, I do really think the stock market's going to drop almost 50%. I mean, it's just the PE ratios are so out of whack. Even now, with it 20% less than the height it was earlier this year, our prices are so aggressive based off of the earnings. And they're basically, what are you saying? Earnings aren't going to go down? people are not going to have the money to invest. So I mean, I don't know how you don't think the earnings are going to go down. I mean, it doesn't make sense to me. So and I honestly, I think it doesn't make sense to a lot of people. I think it doesn't make sense to Warren Buffett, and that's why he's not buying either. So yeah, that's my yeah, I think it's gonna be bad. Like in '08 bad, it really depends on which way you're saying. But is it gonna be bad? Yeah, it's gonna be really bad. So Raphael says, what type of neighborhood do you recommend tracking prices to be ready to buy in 12 months? Income level. So really, I mean, it depends where you want to buy. I mean, you should really track the neighborhood you want to buy. So because again, why are you going to track a neighborhood you're not going to want to buy in, right? You can't track New York and want to buy in upstate New York, right? Like you got to track your market. So in addition to tracking your market, understand that rural areas and low income areas drop harder than more financially strong areas, because the people that have money are still going to have money and they're still going to buy. The people who don't have money aren't going to buy, you know. So and in rural areas, there's less supply, there's less demand in general. So if there's no one buying, the price is going to have to be dropped if someone really has to sell. So it's really a question of how strong are the hands in the market. All right. So remember, guys, I answer YouTube questions, then I answer whoever asks to go live. So anyone's been in my DM asking me questions and wanting answers, this is the time when you get the answer. Ask to go live here. Well, I'll answer your question face to face, put it up on the board, and you know, get you on to the next level. All right. So we got a question here from Gavino. Says, how much do you make off of all your properties, if you don't mind me asking? So it depends the month, because months differ, because I do have some long-term rentals. I do have some Airbnbs. So per month on that stuff, I mean, on a good month, I could bring in like 65,000 a month just from that one business income wise. And then I'll pocket probably like half that. You know, it depends what the expenses are for the time period. So, I mean, I could pocket like 40,000, like on a bad month, I'll pocket like 10,000 a month, like net. It really depends on what's happening, right? So, but that's different from like, because I see some guys online and they'll talk about how much money they made, right? And I'm like, you're talking about many different businesses. You're not just talking about one business, and you're talking about gross income, not net income. So it's a big difference, Gavino, of gross income and net income. Like if someone's like, well, how much money do you make? Well, I can go and be like, well, my insurance agency brought in, how much did it bring in? Brought in $500,000 last month. Like, you know, what are we going to start? Like, you know what I mean? Like, so it's really, you know, don't hear a number and think it's something, because not only that, when you see how much money someone made in a month, not only do you not know how much they kept, also you don't know what type of work was necessary to make that money. So it's not only how much money you make, it's how much money you keep, and what did you have to do to make that money? And lastly, are you going to enjoy making that money that way? So you have to figure out what you want, right? Like I was top of my class in stock trading. I don't really enjoy stock trading, so I don't do it. So if someone's like, well, how much do you make on stocks, or what do you do in stocks? I'm like, well, I know it, but I don't really enjoy it and I don't really follow it. So I know a lot. I just don't keep up with the day-to-day stuff. It's just because I don't feel the return is worth my time. I think there's other things that you can do to make more money. And where, for example, if you invest your energy in learning, say, how to create a business or how to invest in real estate, yeah, you're not making money day one, but the foundation you're building is so big and so strong that finally when you do start making money, you'll make tons of money. Where if you spend a lot of time learning how to day trade and focus your energy on that, I'm not dissing it, right? Everyone has their own thing that they want to do. So if that's you, cool. I do it for a while. I did it for a while, right? And but my point is, the time I invested in my businesses and I invested in my real estate, even though I wasn't making money for a long time, for years, I eventually built that foundation so strong that when I was making money, it blew up and I was starting to make a lot of money. Now, again, once you make lots of money, don't blow that money. reinvest that money, and you're going to consistently make that thing get bigger and bigger and bigger. And then what do I do is I invest in different assets. So I have real estate and I have multiple different small businesses. They call it small business, but they're not that small. And so then if one thing doesn't make you money, right? So like, for example, when all those people like lost money on Airbnb and couldn't rent, I had my insurance agency bringing me money. I had my long-term rentals bringing me money. I had my accounting firm. We do taxes, bookkeeping, and payroll for people across the country. That was bringing me money. So like, it didn't hurt that bad. Did it suck? Yeah, it definitely sucked, but it didn't hurt that bad where I can average it out. And then when the times are good, the Airbnb business makes you a ton of money. Now, the one warning with Airbnb business is people don't tell you, if you do not buy the property at a good price or rent it at a good price, then you could be really stuck when you can't rent it. I converted those Airbnbs to long-term rentals and still made money, where most of my competition could not do that. They were hurting really bad because if they converted to a long-term rental, they actually lost money still. So they're losing money either way. But if they converted to a long-term rental, they lost less money than being empty altogether. So that's why I think beachfront property is going to go down significantly, because there's a lot of Airbnb businesses. There are a lot of hotels that didn't make any money when the market tanked, and they're going to be selling at a huge discount. And I pray to God I can buy a hotel that's worth like $20 million for like $4 million on Clearwater Beach. That would be so sick. And I think it's so possible. I'm not joking. I really think it's so possible. So that would be awesome. That'd be awesome. If that happens, I'm going to host an event at Clearwater Beach in my hotel. Y'all get to come. It's going to be an amazing time. I really hope it's right on the sand. And I definitely think it's so possible. So that'd be sick. That'd be so sick. So enough me fantasizing. Now it's down back to real actionable plans. Next question on YouTube. Hugo says, what tips would you give to a person buying a multifamily property with an FHA loan? So make sure that your tax returns, your cash, and your credit are all lined up in good positions. Because if you have your credit out of whack, where you have too much credit card debt or too much car loans, you're not going to be able to qualify for a fourplex. You might get stuck only being able to get a duplex. So you want to make sure that all those things are in order so it doesn't screw up your debt to income ratio, that you have enough cash. Even though you're only going to put down 3.5% down, doesn't mean you shouldn't have 10 to 20% down saved up, just to show them, look, I got the cash, I just don't want to use it. I want to use it on remodeling the property, to make it better, to invest in the property, which should be your plan. Now, if you don't have the cash, it's not that big of a deal, but you should make sure that you're trying to optimize every single part of your foundation, what I call your foundations of personal finance. Each part should be strong. So in case anything happened, you're able to take the blow and recover quickly, you know? Most people's issues are they're good at cash, but they have no credit or no tax returns. Or they have tax returns, but they have no cash or no credit. They usually have one or two of the three, but if they don't have all three in a decent position, you're only as good as your weakest point, right? That's the problem with when you're like under, say, 10 units. Now, when you're above 10 units or where you're part of an investment group, it doesn't matter because someone else in the investment group is going to help you with the parts that you're weak. So you're going to be working as a team. But when you're individually doing it, all those parts are important, and you're only as strong as your weakest point. That's what a lot of people don't get. Well, I got an 800 credit score. Why can't I buy this property? Well, your tax returns aren't very good. They're not reflecting your income properly, so people are afraid to give you any money. So that's why. All right, so let's got a person want to go live on IG. Let's see if this works. Hey, what's up, buddy? You're live.
Hey, what's going on, man? Just a quick question. As far as with the stock market, how you said it's going to drop 50%. Do you think right now is the time to basically stack up on cash and just hold out on investing until maybe it crashes again?
So I'm not going to tell you directly how to do what you do. What I'm going to do, I'm tell you what I'm doing, okay? Unless something is an amazing deal, right? I'm not buying, right? and if I can flip a property quick, I'll flip a property quick. If I can get an investment property for significantly undervalued, I'll buy it, I'll fix it, I'll remodel it, and get a long-term loan so I could pull out as much of my equity as possible. So when it drops, I'm not feeling it. So yes, I'm moving a lot of my money to the cash position, and any moves I'm making are very fast moves. The only thing that I'm in that's long-term is gold. Gold and silver are the two things that I'm kind of going in long-term that I'm okay with holding as the market drops. Because when the market drops, everyone runs to gold and silver because they're scared.
Paper gold?
Well, if you can get physical gold and physical silver at a fair price, then yes. But right now, like for example, let's just say silver is at like 14 and gold's at 1700. If you're trying to buy it on the street, you're paying 1900 for gold. You're paying like $17 an ounce for silver. So if you can get it at a fair price, then yeah, pick it up. But if you can't, I'm buying like ticker GOLD and ticker GLD. So I'm in paper gold. Paper gold means gold that you buy on the stock market, where compared to physical gold, you're actually holding it in your hand. So that is the moves I'm making to kind of just like buy me some time until, I can buy other stuff. And hopefully I'm feeling pretty confident that the prices of silver and gold are going to go up a lot. So now my cash moved into, the metals went up. So now I have more money to buy discounted real estate or stocks, because I'm okay with buying some stocks too when the market tanks. Because I do like Tesla, I do like Disney, I do like Amazon, I do like Google, but at these prices, I don't like them, because everything is based down to like, people will ask me like, hey, Pascal, you want to buy this property? And I'll be like, yeah, I'll buy any property for the right price. And I'm like, I don't like it at that price, I won't buy it, but at this price, I'll buy it. So I think in 12 to 24 months, there's going to be a lot of properties out there that are good prices that you're going to be very happy with your return on investment.
Okay. All right. And should the rule of thumb still be 10% of your portfolio in gold?
There's some people that like 10%. There's some people that like more than that. So like right now, I'm heavy real estate. I've always been heavy real estate just because I don't sell a lot of my properties, right? But 10% is a good rule of thumb. Will I get out? Like, will I be fully out of gold in 24 months? There's a good chance I will have no gold in 24 months. I will sell everything and go hard all in real estate, because I feel like there's going to be such great deals coming that the amount of real estate is going to go up is so great. And then eventually what happens is the price of gold goes back down, right? So like there's a lot of speculation that gold's going to hit like $3,000 an ounce, which is almost about a 35-40% or about a 50% increase from where it's at now, more than 50% actually, because it's at like 17 an ounce now. So once it hits 3,000 or even to 2,800, I'm probably out, because it's not going to stay at 2,800. Even though gold is worth that much, it doesn't stay at that level. So I'm going to be out and then be into real estate and picking up everything at a discount. So I'm going to be constantly moving from overpriced assets into underpriced assets, so I can constantly work my way up and make more and more money by just trading my assets for other assets, right? Just think of it like this. The guy that's on TikTok, and he's like he had a piece of paper, and on the piece of paper he wrote something funny on it, and he traded it, and he kept trading it and trading it and trading it, and he's like, I'm going to trade it up all the way to a car. Well, this is how it is with the investments. It's like basically you're just constantly trading your investments for something that you feel is overpriced to picking up an asset that's underpriced. Now, again, God willing, I'll be buying that hotel on Clearwater Beach when the market tanks, and I'm probably going to hold that hotel forever. That's going to be my generational wealth, something I pass down to my children's children, and it's going to be cool. But what other questions you got for me?
One last question. Now, I have several different streams of income, but the last one that I'm really interested in getting into that I'm not into yet is real estate. So my question is, my first investment, should it be a flip property or should it be a long-term investment?
So it really depends how much money you're going to make off of the flip, how fast you can do it. If you've never done a flip before, I'm warning you that it takes longer than you think it does. So I don't know what your skills are. I don't know who your connections are, but I will tell you this. It usually takes longer than expected, and the cost is usually more than expected. So if you can get in and out quick and be willing, like you know yourself, you're going to be willing to cut your losses and be like, oh man, market's tanking. I'm out. I'm going to sell this for like no profit. I'm just going to break even and be out now. I'm not going to like try to hold on and make a little bit of money. No, just out. Give me my money back. I want out of this thing. As long as you're willing to do that, then and you could do it fast, then I was like, sure, go ahead, do your flip. But again, if you're not making a lot of money, what I did is I ran my numbers on flips back when I was starting to buy in like between 04 and 08. I ran my number on flips and I'm like, man, I'm going to do this flip and I'm going to make maybe like $10,000, $15,000. I'm like, all that work for $10,000 or $15,000, it's not worth it. So if I buy this rental property, remodel it, do the BRRRR method to it, I'll still keep it. I'll get all my money back, and I'll make about $5,000 to $10,000 a year off rent. Hey, that's an awesome deal for me. I got no money in. I'm making that money annually, and I got all this wealth built up in the property. I found that strategy was better because if you're doing the flip and you made $10,000 to $15,000, you're going to take that money into the next deal anyway. What does it matter if you're renting a property and it's holding the $10,000 to $15,000 profit plus you got all your money back, and now you're collecting this profit from the rent. So for me, again, it normally doesn't make a lot of sense to do flips unless they're like amazing returns on investment. Do I do flips sometimes? Yes, but it has to be a great deal. Otherwise, I'm not interested because the amount of work, I'd rather just do a buy and hold and then BRRRR method the property.
Okay. All right. Thanks a lot. I appreciate that.
No problem. I got you. So that's my opinion. My opinion, is like if you're going to spend all that time, I'd rather keep the property, right? Unless it's an amazing return, then I'll sell it. And then someone would tell me, well, Pascal, if it's such an amazing return, why don't you just BRRRR the house and keep the house? Well, I'm BRRRRing a house. I'm not going to be able to get that much money out of it on a BRRRR for a house. I'm going to get something. But then if I just took that same cash and moved it into a multi-unit property, I would make so much more money, a larger return on my investment annually from the rent coming in. So why would I hold it? It's better for me to just sell it and put that into a multi-unit and then make the money on that thing, right? So that's why I don't keep the house, even though I could do a BRRRR method on the house. It's not worth keeping. I'm only keeping the stuff I only keep things that are going to make me good money in rent. And I flip things that are going to make me good money on the sale. And I will keep real estate that I could make good money on a sale, but I'd rather just keep it as a rental, BRRRR method, take out my equity that way. Eventually, there is a point where you'll have to sell the real estate and move on to something bigger. But at that point, I'm just trading up. Got another question on IG. So, B Enlightened says, how long do I have to wait to do a cash out refinance after a loan modification or an FHA loan? Well, loan modification, it depends. Like, how did the loan modification affect your credit? Because your loan modification could have affected your credit, and that changes a lot of things. But let's just say you did a loan modification or a refinance or got an FHA loan. It doesn't really matter what you did, but you purchased the property. Normally, within 6 months, another bank will be willing to do a refinance based off of the current market value. So let's just say you bought a property for $200, but it's worth $250. After 6 months, normally another bank will be willing to give you a loan. You can do a refinance. They'll give you 80% loan to value. You can then refinance the old loan, pay off the old loan. You have a new loan. It's the same amount of money. They didn't even give you anything extra, but you probably got a lower interest rate and got rid of your PMI. So now the amount of money you're making per month that you net is a lot greater. And if you're living in the property, you can always then go for a home equity line of credit on that property to get the other 20% and use that $50,000 to buy another property. To do that, though, you have to have your credit in order, your tax return in order, and your cash for your property and your personal finances in order. If you don't have those things in order, you're going to get stopped, and they're not going to let you get any more loans or buy any more properties. That's why my foundations class is important, so you know that you do not get stuck in any one part, that you're keeping in mind all of these moving parts so you don't actually get yourself stuck. All right, next question is from BN Land. I heard 1 year, but not sure if that's accurate. Trying to get that money to invest in my first rental property. So normally it's 6 months, but it can be 1 year. Raphael says, heck yeah. And then BN Land says, you skipped Lucina's question and April's question. Did I? All right, let me see. Okay, Lucina's question was, if you buy a property with tenants that can't be evicted by the old owner, can you not evict them either? Well, it depends what state you're in, because in some states, you cannot remove a tenant very easy, and their contracts are very long. So if you're in New York and California, it's very hard to get rid of a tenant, and it can take a very long time to get rid of them. Is it impossible? It's not impossible, but you don't know for sure how that's going to go. So you really need to ask a lawyer if you're in one of those states that are very pro-tenant and know what your rights are. But if you're in like Florida, Texas, or Arizona, it's pro-landlord. So it's pretty easy to remove a tenant that's not paying their bills in those states. Like right now, Florida is open to do evictions. Like we can evict someone if they didn't pay their rent. So, it depends what state you're in the situation. April says, I went to my first auction preview today and took lots of notes and pictures of the work needed to be done. I live in a rural area and it's hard to find comps. What is the best way to address this? Be extremely conservative when you're estimating the price of this property. That's what's difficult with making money on properties in rural areas, is that there is no comp. So you have to buy it for a very, very low price, significantly under the price you think it's worth. Because if you're stuck with it or you have to sell it for a deep discount, you can. This is the problem with rural areas. There's a thing, it's called, there's a thing that's basically like you can't buy demand, right? So meaning you can't reduce your price low enough to make someone want to buy it because there's just literally nobody that wants to buy it. Now that sounds crazy for many people who live in busy areas that have a lot of real estate around. But if you're going to a rural area where there isn't a lot of people and there isn't a lot of properties, and if you're selling something on 2 acres and there's nobody that really is looking to buy, then you can't sell it. Like there's no one that's going to buy. So you can't sell it cheap enough. You basically can't give it away, right? That's the problem. So that's why those properties end up dropping hard when the real estate market tanks. So you can buy a property that's worth, say, $200,000 in a rural area for like 40, because there's nobody there to buy it and you're the only one that's willing to pay for it. Now you might have to wait 2 to 5 years to sell the property for like, say, 150, 200. But if you're willing to be patient, you can make a lot of money. That is a option, right? So, but it's how your strategy is, right? It depends. So be very careful. All right. So Raphael says, what's the BRRRR method? So the BRRRR method is buy, remodel, rent, refinance. So you buy a property under 70% of after renovation value. So it's 70% minus cost of repairs. And then you repair it. You then rent it. And then you do a refinance. And why you want the purchase price plus the repairs to be at 70% of the after renovated value is because when you do a refinance, you will be able to take all the money you invested in the property out and you have no money left into the property. Now you basically own the property for none of your own cash and you're going to continually collect the rent. And that's called the BRRRR method. And that's what I call like a perfect BRRRR, because you have no money in the deal. Now you could do a BRRRR method and have $5,000 or $10,000 in the deal remaining, which is still not bad. You're still making good money. So Hugo says, does your course teach how to negotiate with the seller or buyer? Yes, it will have some negotiation strategies with the seller or buyer. Basically the things that they're going to want to hear or the things you should say. And each of the things that I want to explain is based on situation. So some of these things we're going to be based off of a good market. Some of the things are going to be based off of a bad market. So you have to have active listening skills because you have to hear what they're saying and understand what they're saying, or you have to understand what the realtor is saying the buyer is thinking. So then you can respond in a way that they're going to really get what you're saying. Good question. All right. Got a question here on IG. It says, planning to continue my further education in property management. Need some opinion on this. I don't understand what the question is. Should you continue to further your education? Yeah, I think you should. I think there's going to be a need for property managers in the future. It's really based off of like having people with really good skills. So not only do you need to educate yourself, but you need a real world experience to make sure that you're helping the property owner. The net goal for a property manager is to increase profitability of the owner by one, reducing issues with tenants, reducing evictions, reducing repairs. So if you're keeping an eye on the property to make sure that their expenses don't go up and their income does go up, then you're going to do a good job as a property manager. The more profit they make, the happier they're going to be. The longer they want to keep the property, the more money you make. So King Priv said, would you buy a duplex for $359,000, 4-bed, 2-bath? So that means it's 2-bedroom, 1-bath each side for $359,000. So let me explain, King, why that's not enough information. I just sold a duplex, 4-bed, 2-bath, which is 2-bed, 1-bath each side, just like you said, for 190 something thousand, 192, I think. I bought it for 143. It was the first property I ever bought, and I just sold it like 6 months ago. So I thought I got a great deal. I sold it for 192. I thought I got a great deal. And I'm like, wow, I don't understand how these people are paying this much for this property. I bought it for 143. A few years later, after I bought it, I realized I paid way too much money at 143 for that duplex. So income on a duplex determines the value of the duplex. Consistency of the income also determines the value. So if you're in a low-income area that generates good rents, but the people constantly are not paying the rent, getting evicted, or destroying the property, it reduces the value of the sale price of that property. If you're in a better neighborhood, then the price goes up for the same amount of income because the consistency of the income is more guaranteed. If you move into an amazing area, right, that has high demand with people that make great money, that have consistent income coming in and pay you consistently, that take care of the property, the price they're going to ask for the property is a lot higher. So the price does not determine the value of the property. Saying $359 for a 4.2, is that good? I don't know what the square footage is. I don't know what area it's in. I don't know how much rent it's going to bring in. I don't know what the condition of the property is in. Like, that is a very basic question, right? And no one could give you a right answer based off of that question. There's so much data. Like, for me to properly price a property when I first started would probably take like 4 to 5 hours to properly price out a property. Now I can do it in minutes because I've done thousands of properties and I have a lot of things built up in my head. But like, to say that just off of that data is not enough. I mean, again, where? New York City? It's a slam dunk. Amazing deal. Are you in like some, rural area of Louisiana? No, that's a bad deal. So I think you get my point. So it is in the hood, kind of. No, it's a horrible deal. If it's in the hood, then it's a horrible deal. What's the cheapest a person should pay for a duplex in Florida? I mean, I picked up a duplex in a good area that's 3-bed, 2-bath each side for like $140,000, but it was in bad shape. So it's not priced. Like, you guys got to understand, price has nothing to do with this game, right? Like, I'm talking about price. Price is a measurement. It doesn't have anything to do with this. It's the value you're receiving, right? So don't think what's the cheapest price someone could get. I mean, I knew people that picked up duplexes for like 20 grand, like 10 years in the last 10 years. So it matters. So Josh has a question. He says, how much cash should be in a solid position in the 24, 36 months? Well, Josh, I can't tell you how much money. Okay, $2 million, $8 million, $20 million, right? Like, obviously, those answers don't mean anything because what if you're like, I can't raise $2 million? As much cash as you can, right? Like, stop buying Starbucks, stop eating out, save all your money, stack up the cash. So when I first started, I was only making $8 to $12 an hour from the various jobs I had. $8 to $12 an hour, okay? So think of it. I was able to buy a duplex every year, making $8 to $12 an hour. What does that mean? That means I saved up every penny I could. I eat out? Yes, I ate out like once a week. Did I enjoy myself? I did. But like I only went like out to the bars and whatever like once every 3 months, maybe once a month, not like every weekend. Did I eat out? I ate out once a week, not every day. I didn't buy Starbucks. I didn't spend money $3 on coffee because $3 of coffee a day is like, $2,000 a year, something like that, $1,500 a year. So it adds up, So my point is save as much money as possible, pull back and stack up the cash so you can buy these deals, right? This is one of the rare times I'm going to say stack up your cash, instead of invest, So I hope that answers the question as best as I can in this situation. All right, I'm planning to continue. Okay, I already answered that one. This one. All right. I bought a property in 2015 for $740,000 with $200K down. Now it's worth $600,000. What should I do? Wow. You bought it in 2015 for $700 and it's worth only $600 now 5 years later. So you got to find out like what is the reason that it went down? Like most of the properties you bought in 2015 should have like went up 20, 30, 40%. It doesn't make sense that it went down. Like it matters your city. So you have to determine what's wrong with your city. If you're in that Chicago area, a lot of people in Chicago are having this problem because there's a lot of crime, there's a lot of taxes, employment's going down, and the city's going to slowly go down more and more and more. I think that's going to continue to happen until it bottoms out, and then it'll come back up. Do I think it's going to do very well during this recession that's coming? No, I don't think it's going to do very well. So, I mean, I would definitely think, let's just say I have one of my investors, they own a home in Chicago, and they said they just bought it for $850,000, and they're planning to sell it in like 2 or 3 years. I said, sell it now. I know it's hard to take a loss, but I told them sell it now, because if you're planning to sell in 2 to 3 years, you're not going to be worth $850 then. Well, it's a great city and everybody likes it. Sorry about that. They're like, oh, well, it's a great city. Everybody likes it. It's going to be easy to find someone to buy it. If you think so, I mean, it's going to be tough. All right. Hugo says, does your course, I answered that one. B in line says, after refinancing, how long do I have to wait to get a line of credit on the same loan? I mean, you can wait like literally the next day, next couple of days. Jojo King says, love you, man. Love you too. Thanks for all the love, guys. Thanks for all the thumbs up on IG and YouTube, for all the comments, for sharing my information. It's really like a great way to show that shows me that you appreciate all the things I'm doing for you guys. I'm more than happy to help. And I'm here for you guys to be successful. So about the course, again, I made the course because you guys have been asking for it. It's called The Foundations of Personal Finance. It teaches credit, teaches different methods of savings. It teaches how to set your tax returns up properly. It teaches you how to find and purchase, negotiate your first and second deal, right? You should be able to, this information should be good enough for you to probably do like at least 4 deals with it. After that, you're going to need additional information. And then also the way the wealthy think. So I think it's like $297. I basically made it cheap enough for everyone to afford and to just cover the cost it cost me to get it produced, because the system, the equipment, paying someone to edit the videos, like all that costs a lot of money. It's like thousands and thousands of dollars. So I'm basically just pricing it enough so I can get back the money I spent on making it for you guys. So, hope you guys appreciate that. It's on sale for the next, for the rest of this month, right? But as of next month, it's going to go to $997. So, get it while it's like super cheap, So, people asking info. The course, the link is in the IG bio. So if you go to your IG bio, my bio, you'll see there's a link there. Click on the link. It'll take you to purchase the course and get set up, Got a question here from Tim. If different company run your credit the same day, who it be reported individually? I guess he's asking, okay, if a company is multiple companies are running your credit, if it's the same type of company, like say all our mortgage companies within the same period of time, it's not going to, even though it's going to show up as multiple inquiries, it's not going to affect your credit score. It's really only going to affect it as if it's like one, right? So if multiple companies. And that's part of the, in the class, it talks about that as well. All the different things you didn't really know about credit, it talks about that in the class. So Star Detailing LLC says at Zadik, what if all that's in order? I don't understand. Okay. Anyway, so the information is Foundations of Personal Finance. That's like a base course, and it works in every country. It's kind of like, it's not really meant, it's to understand how the basics of personal finance work. Could interest rates be different? Yes. Are some factors in credit going to be different? Yes. But overall, everyone judges these systems very similarly, not exactly the same, but very similarly. So they're going to still be able to work in all countries. So now back to the Q&A. I'm going to answer a few more questions before we go. How much percent should I put in gold between cash and gold? I mean, it depends how much cash you have, right? So if you have a lot of cash in reserves to cover your basic living expenses, then I would say like half. But if you don't have much cash and you only have like 2 months of savings in case you lost your job to cover your expenses, then you shouldn't buy any gold because you don't have enough. So King says, is it all videos or is it videos and test courses? It's not, it's videos and written content. I don't really have tests, there's going to be examples for like when I'm running numbers. I'll give you some examples, but it's not like a test, right? It's not like that type of course, you're not going to get a grade. I'm just going to be transferring my knowledge to you to say, hey, look, this is what got me to 23 units at 23. This is the information that you can use and consistently apply. And here you go, So when is a recession likely to occur? I think it's going to be 12 to 24 months, depending on like if, the second stimulus package is going to come out for the government, if they're going to extend unemployment benefits, things like that. Because right now unemployment is greater than what people are making through some people are making more money through unemployment than they are through their job. So what's happening is a lot of people are choosing not to go to work. Well, if they extend that extra money that they're paying on unemployment, because there's like in Florida, it's like $600 of unemployment plus an extra like $250, $275 from federal government to help with unemployment. So that's $875 a week. That's like more than most people are making a lot of people are making at their job. So if they extend that, then a lot of people are going to choose to stay home instead of going back to work. If they get rid of it, more people are going to choose to go back to work, which is going to help the economy move. And if people continue to stay home instead of going back to work, then the employers are not going to have people to do the job they need. So eventually they might just decide to shut down as well. So it's like a self-fulfilling prophecy in a way, you know? So it's 12 to 24 months is my prediction. All right. Lots of good questions. Can you invest while having student debt? Yes, you can still invest while having student debt. A common question that I get is, should I pay off my student loans before investing in real estate? My answer is normally no. So normally the answer is no. Make your minimum payments on your student loans and use all your money that you can to save up to buy a property. Because your student loans normally is a low interest rate and your minimum payments are very low. Their student loan debt doesn't have, and your medical debt doesn't have a significant impact on your credit and on you being able to qualify for a home loan. Your return on investment in appreciation in a investment property, like a good investment property, should be significantly greater than the debt you owe on your student loan. So it's like, you're not going to save much money by paying off a student loan. Again, cash is a loan from the government. So you're taking a cash, which is a note, to pay off another note. Doesn't make sense, right? Where you should be using that money to buy assets so they can grow. And it's going to grow faster than the debt you owe, the rate of your debt. That's the concept. That's what I played, the game that I play. And that's how I've been able to consistently grow over time. Mm-hmm. All right. So Benjamin says, what advice would you give to someone who is roughly no knowledge on real estate but wants to get into it? So when I got into the game, I had to travel and find mentors and do a lot of free work to get the knowledge. Right now, you can go on my YouTube. I have like hours and hours of stuff on there, and you're going to be able to learn a lot. Go on my IG. You'll have hours of stuff on there about theory, running numbers, and watching a project go from the beginning to the end, seeing all the construction, why I buy certain materials. You're going to get a lot of information, but you got to study, right? No one can make you study. No one can make you absorb this information. And if some people will DM me, this is the funny thing. People will DM me and they're like, hey, I would like you to mentor me. I'm like, cool. My page is meant to mentor people. And I'm like, so then I'll send them what books to read and then tell them where you can find my videos to study more. And then, hey, if you want additional information and you want to fast track your learning, you can take my course. That's an option. These videos should be sufficient for you. And they're like, but I thought you mentor. And I'm like, I do. They're like, well, when do we get to talk one-on-one? I said, well, you got to understand, a mentor, I would only spend 15 minutes to an hour with them. And normally when I got an hour, I was doing something for them. And that's how I got the hour. I wasn't just sitting down and they were like giving me stuff, right? These guys are crazy busy and they have families and whatever. Like right now, I run 5 companies. So if you imagine doing this right now at this time of night is hard enough. So I'm like, what you're asking for is a tutor. A tutor and a mentor is very different. Mentors will provide you about 5 minutes, 10 minutes of time, and that's it. But like, here's your info. Hey, what's your problem? This is my problem. Here's your solution. Go. And well, you're not going to do it with me? No, I'm not doing it with you. I'm not your employee. I'm your mentor. I'm not your tutor where I'm sitting and doing it next to you. I'm your mentor. So a mentor is different from a tutor, right? Don't get it confused. And even me, when I went around and traveled and sat with people, no one sat with me for hours. I'm saying they're going to give you some information. Hey, you need help? Read this book. Well, you can't just tell me. Well, the amount of time someone's going to tell you is like is a large amount of time. For me to transfer, imagine this. I have 20 years of experience. How am I going to transfer 20 years of experience to you in 1 hour? Let's make believe it's an hour. I'm going to give you a lot of information, but I can't give you 20 years of information. I would basically have to sit with you for a few hours every day for the next 5 to 10 years for you to come and be at my level. right? It's going to be faster than 20 years because I'm basically helping you skip all the mistakes. But still, it's not like, you got to understand, if you're not willing to work, none of this will work. Nothing you decide to do will work. You have to be willing to work. You have to be willing to put in the energy to get the results. So you have to study. You have to watch the videos. Like, I literally made it for you guys. I didn't make them for me. Trust me. I don't make money off of IG or YouTube or anything. I'm here to help you guys to be successful. Now, again, I have an insurance agency. If you're in Florida, you can buy your insurance from me. Anyone in America, I can do your taxes. And if you're in Florida, I can also do your mortgages. Other than that, like, comment, and subscribe is the only really way you're going to show appreciation, you know? Yeah, normally 30% or more undervalue is a good deal. But again, it has to be 30% or more undervalue. And then you have to also subtract off repair costs. So if it's another 20,000, it needs to be 30% plus 20,000 off. What advice would you give someone who is highly interested in getting into real estate, but only has roughly 600 to 800 a month to save towards it? 600 to 800 a month is a lot. I mean, not a lot, but it's a good amount. In 1 year, that means you save $10,000. If you find a couple of other spots to save, you could probably save another like 400 or 500 a month. Just keep shaving stuff down. In 2 years, that's like, what, $30,000 you could save if you keep on shaving, you know, off some of these expenses. $30,000 is a good amount of money. $30,000, you're in your first property. You take some of your money that you have, the cash extra you left over, you put it into gold. That price should go up. I'm not guaranteeing it, but I have a very good feeling it will go up. Now your investment, your savings increased as well. So, you know, definitely you need to, like, you can't think it's not a lot of money. A lot of people will think $100 is not a lot of money, or 200 or $1,000, like an iPhone, right? A lot of people will go and buy an iPhone for $50 a month and then end up paying like $1,200 for an iPhone, but then think, you know, oh, I don't want to spend $30 for a book, or I don't want to spend whatever money to invest in my business. Oh, I don't want to spend $400 to invest in my business, or I don't want to buy $400 for software, or I don't want to spend this. Like, you can't say, oh, I only have $800, and then say, well, it's not a lot of money, but then we spend money on garbage and then don't spend money on things that are going to help us grow, right? Like, I spend $200 a month on the vitamins, right? Vitamins, protein powders, whatever, because I want to be healthy. I want to stay healthy. I want to stay strong for years to come. I see people 50 years old beat up. And then I see 50 people, like the guy who trains me, Tony Conyers. He's a world champion powerlifter. He's 62 years old, weighs 165 pounds, and squats 600, deadlifts 620. He's a natural powerlifter, and he's 62, still does it. My Wing Chun coach, he's 60 years old, and all the guys are like 60, 70 years old, and they will kick your butt. Like, it's amazing to see people that take care of themselves, the condition that their body is in the future. So you must invest in yourself spiritually, physically, mentally, emotionally, and financially. And you must consistently invest in those areas, and you're going to see returns on your investment. And if you see you're unhappy about something in your life, it's normally because maybe certain parts of your life are awesome, but then other parts of your life, I call them the pillars, the other pillars are weakened. So remember, spiritually, physically, mentally, emotionally, financially, the pillars for your life. So invest in all of them, and you're going to constantly grow. And what happens, sometimes we do fall into the issue of investing so much energy in our financial pillar that we weaken everything else. And then we'll stop, and then we'll focus all our energy into working out, and then stop. It's hard for me as well, but try to balance your life, okay? Try to balance your life out and invest all your energy in everything. So, all right, next question. What should I be doing at 15 years old? So I'll tell you what I did. I studied a lot. I studied investing in the stock market, in real estate, finance. I kept on trying to better myself physically. spiritually, mentally, emotionally, and I saved my money because you have to save your money because if you don't have anything saved, you can't invest. And then I immediately start investing and I keep growing. Good question. And keep up at it because before you know it, you'll have a lot of money. You'll have probably $20,000 saved up by the time you're 18, or maybe even more than that. You know, I mean, there's a lot of guys that are young on online that are making money. No one cares how young you are. Just what they care about is how hard you work and are you like motivated and are you consistent. Keep it up, and you're going to be able to, you know, do well. Villa says, how do you find distressed homes during this time? Honestly, I found them mostly on MLS. The second they hit the market, I buy them, right? I'm constantly focused on what's coming up to the market. So when a good deal comes up, I'll try to buy it right away. So it's on the market. I haven't found many good deals that are like through wholesalers. So, you know, DM me if you want the books that I read. All right, it's going to be the last live. All right, it says unable to join. All right, so I try to go live. It says unable to join. Guys, this was great. We've been on for about an hour and a half. You guys have great questions. I hope you learned a lot. What would I use 50K for when investing into real estate? I'd buy multi-unit property. So it was great seeing you guys. I'll be live again Wednesday at 10 p.m. as well. Bring all your questions. Tell your friends to come and join us. The more the merrier. Obviously, if your friends are learning as well, your full circle will grow financially and everybody will grow together. It's good to all think the same way. So invite your friends, have them learn, you know, share my content to them. And I'm going to go live again Wednesday at 10 p.m. So again, for any of those that want to learn more, I have my class for sale. Right now it's on discounted. It's $297. Normally it's going to be $997. It's on sale for the rest of this month. They'll teach you the foundations of personal finance. On YouTube, there's a lot of content. Thank you guys for all the thumbs up, the love, the likes, the sharing. I appreciate you guys. Everybody have a blessed night.